I love when fear is the highest, and I love when the price is dumping, and that's my edge as a trader.
I don't believe anyone can outperform Bitcoin trading.
Had I just bought and held, I would be doing a lot more poorly than my current trading.
Good luck trying to pick one flower out of all the weeds on CoinMarketCap.
What's up, guys? I'm Giovanni. Welcome back to our weekly crypto market show. Today with us we have Dan McDermitt, technical analyst and YouTuber at thechartguys.com, and for the first time on our channel, financial analyst and founder at Standpoint Research, Ronnie Moas. Welcome, you guys. Ronnie, you have always been very critical of technical analysis. In a tweet last year, you said that technical analysis is a trap and that technical analysts will always find a chart helping them make their case. So Dan, you are technical analyst. What do you respond to that?
I certainly understand it, especially when you go on, Twitter and you have 1,000 different people using 1,000 different kinds of technical analysis. And there are a lot of people that will just change the technical analysis to fit the view of what they're looking for to happen. So I certainly understand that viewpoint. I know for me personally, it's always been about finding a happy place on the spectrum. You got fundamental analysis here, you got technical analysis here, and it's never good to be completely on one end of the spectrum, in my opinion. So I find the happy medium where I definitely am aware of fundamentals, but more so on the side of technical analysis. I just know that for me personally, I've been using it for 9 years. I never use it to predict what is going to happen. I use it to set up my clear risk and reward profile of every trade that I take. So I know I put myself in positions where the risk is small, always a stop level set, and then I try and position myself where the reward ends up being more profitable. And for me personally, it's been working. I have results that show me using technical analysis to be a trader has allowed me to outperform what I would be doing as a fundamental trader. So it's really a lot of experience. And you're also going to find a lot of people on Twitter who don't have that experience trying to use technical analysis. And it takes thousands and thousands of hours and a lot of practice to be able to utilize it successfully, in my opinion.
Ronnie, do you have anything to respond to that?
Well, my problem has always been with people that are looking exclusively at a chart to make a decision. And I don't believe anyone can outperform Bitcoin trading. Bitcoin has gone from $100 to $10,000 in the last few years. That's 100x. I don't know many people on Twitter who claim to be technical analysts who made 100x on their money during the last few years trading. One recent example I can give you is on the 17th of December, there were technical analysts warning of a death cross on Bitcoin when we hit $6,400. Okay, we jumped 60% since then. 2 months exactly to the day, 60%. And there were people that got out of what may have been an opportunity of a lifetime because they were scared out by the technical analysts that gave them this false sell signal. So it's okay to look at a chart, but you also have to look at valuation and you have to look at fundamentals. And one thing that Dan mentioned is that he does look at fundamentals, and most technical analysts will not admit that. And those are the people I have more of a problem with. There are people that claim to be technical analysts, but they have no results to back it up. And I think most of the people who make money using technical analysis are the people who are selling you their buy and sell signals, but they're probably not making that much money trading off of those signals. And there are exceptions to every rule, I'm sure.
Ronnie, how can you interact with market movements without technical analysis?
Well, if I'm going to use technical analysis, I'm usually taking the opposite side of the argument that the technical analysts are making. So if I see a big green candle and I feel like putting a trade on, I'm going to sell into that candle. And if I see a big red candle and everybody is jumping for the exits, I'm probably going to add to my position. So if I look at technical analysis, it's more of a contrarian indicator as opposed to following everyone that's looking at the same signals. So, the bottom line is we've had tens of thousands of candles on the Bitcoin chart in the last few years, half of them are green, half of them are red, and we're in the same spot on the Bitcoin price that we were a few years ago. So good luck trying to find a pattern there. I can look at one chart and Bitcoin looks overbought, and then I can show you another chart and it looks oversold. So are you looking at the 5-minute chart, the weekly chart, the monthly chart? There are very, very few people that can make money doing this, and people need to understand that. And one more point that I would like to add is that I recommend that people trade with 10 to 20% of their money, okay? But not off of technical analysis. When you have a move from 6,400 to 10,500 like we had recently, you would be foolish not to take 5 or 10 or 15% of the money off the table. We came down $800, you buy back what you sold at 10,500. So I'm okay with trading, but you have to be very disciplined and you have to know who you're taking advice from.
Mm-hmm. Dan, do you agree that it was impossible to interpret those green and red charts? Do you agree?
So my response, I agree with him on a lot of things. Number one, having a core position, having a no-touch position, and then trading around that. I like that a lot. I also agree with him trading contrarian using charts. My favorite play is oversold bounces. So I love when fear is the highest, and I love when the price is dumping, and that's my edge as a trader. I perform really well on those oversold bounces. As far as outperforming, he's right. Most people are not going to be outperforming the price of Bitcoin. I know for me personally, from the time I took my first trade ever in cryptocurrency, May of 2017, had I just bought and held, I would be doing a lot more poorly than my current trading, and I'd be happy to provide results to back that claim up. But it would be something along the lines of, if I held Ethereum for my first buy, I'd be up maybe 500, 600%. In the end, right now, having traded for 2.5 years, it's roughly 3,000 to 3,500%. So for me personally, again, there's always exceptions, and I can absolutely agree with him. That's not the most common result. But for me, I've been dedicating tens of thousands of hours to this full time for 9+ years. So with that being my goal every single day is to get better as a trader doing it full time, that it's a scenario with the amount of volatility we've seen in the cryptocurrency space. It has allowed me to take advantage of that volatility, buy the fear, sell the greed, and come out in front.
That sounds pretty solid. But let's get a little bit more closer to your personal experience. If you allow me to ask, what percentage did you manage to get out of just technical analysis for you, Dan, and from fundamental analysis from you, Ronnie, in the last year?
I don't keep track of my performance. I don't have time to keep a spreadsheet and track every time I went in and out of Bitcoin. Bitcoin for me is buy and hold, add on dips, and I will check how I'm doing a couple of years from now when Bitcoin is probably trading somewhere between $25,000 and $50,000.
I'm mostly on the same page. I don't have the last year off the top of my head. I have that rough figure from my first crypto trade ever that I've been keeping track of. But for me, it's always fluctuating. Sometimes I'm focusing more on stocks. Tesla was going crazy recently. All my focus was on Tesla. And then when Bitcoin starts going crazy, I start focusing on crypto. So it's always fluctuating my attention. And because of that, obviously the profit and loss is fluctuating as well. But so far, green year every year, which is what my goal is, just stay that course. And looking forward to, as Ronnie says, I do believe based on a long-term monthly pattern that I'm watching on Bitcoin, I do believe that we're going to see a tightening range into the middle of the year. And I am looking at the more likely scenario to be a bull break. And I do believe all-time highs will be coming again. And with that will come hype, euphoria, and a whole lot of profits.
We just reached a golden cross, which apparently is a very bullish sign because the 50 days moving average line just intersected the 200-day moving average line. And the last time it happened, Bitcoin pumped 170%. So do you guys expect these kind of gains to repeat themselves? Dan, first you.
Well, it's always possible. For me, the death cross that Ronnie mentioned and the golden cross, I don't act on those signals. Those are long-term lagging indicators, in my opinion. Those are the kind of indicators that they talk about on CNBC for the people that don't really have a whole lot of experience with technical analysis to be able to understand. For me, I use price levels to determine trends. Higher lows and higher highs are an uptrend. And generally, you're going to see the trends change on the daily and weekly time frame long before those moving averages are going to cross. So they're a lagging indicator. And in my opinion, the people that are acting on it are behind the curve, so to speak.
So as far as I understand, you're not that bullish about this signal.
Not the signal. It has nothing to do with the setup for Bitcoin. For me personally, again, I'm watching a tightening monthly pattern ever since our 2017 breakout. It's just highs and lows and tightening ranges, and that's going to break at some point this year, favoring the bulls with the halving coming up, and that's again where the little bit of fundamentals comes into play for me. But as far as this signal, the golden cross being the reason for anything, I don't think it's significant.
So why so much media buzz around it?
Because it's easy for the herd to understand.
It's like
the way Donald Trump speaks to his supporters. Keep it simple. There's always going to be a lot of people that are attracted to that type of approach. Yeah.
So Ronnie, you're also skeptical about this golden cross signal?
Well, I'm not skeptical about the golden cross signal because it kind of what the golden cross is telling you right now basically coincides with what I think is going to happen. My target for Bitcoin is $28,000 this year, which would be a retest of the high from 2 years ago and then a 40% overshoot of that. The problem with the golden cross is everybody that jumps on Bitcoin now, when they see the golden cross, missed a 60% move in the last 2 months. What do you think the smart people are doing? They're selling into that golden cross right now and locking in those gains, and they can sell into that without moving the price downward, which is what happens in an illiquid market. If I have a big position to unload right now of hundreds of millions of dollars, you can be sure I'm going to sell into the buying that takes place when everybody hears that golden cross alarm going off.
So you would.
I may let it overshoot the golden cross by 5 or 10 or 15%, but my finger would be on the sell button if I was a trader and I saw that right now.
So you would act contrarily to the trend.
Yes. As Dan can tell you, one indicator I like to look at is relative strength. When it's below 10 or 15, I'm buying, and when it's above 85 or 90, I'm selling.
What do you think, Dan? Do you agree with Ronnie's vision?
Yeah, RSI is definitely one of my favorite indicators, and it's what helps me with those oversold bounces that I was talking about. And like I said, it's a lagging indicator. So as his point, we're up 60%, and those who used a daily trend change weeks ago with a clear price of a higher low and a higher high, they are in way before the golden cross signal goes off.
Some says that this is going to be the last time we see Bitcoin underneath the 10,000 benchmark, and that it's time to buy Bitcoin now. Probably, what is your position about it? Do you think it's a good time overall to buy Bitcoin then?
I actually tweeted about that exactly a couple of days ago, and I said there's probably a 20 to 40% chance right now that this is the last time you will ever see Bitcoin below $10,000. If Bitcoin retests the high from 2 years ago, it's probably going to happen this year, and then we'll go probably towards $25,000. And then if we have a nasty correction or a bear market in 2022, 2023, I don't see us coming back down and retesting 10,000 again. So, I would say it's 20 to 40% chance that this might be the last opportunity people have to get in at this level.
But what are the fundamentals you are based this hypothesis on?
Well, the inflation rate on Bitcoin is dropping from 3.6% to 1.8% in May when we have the halving. And then you will be in a situation where half of the currencies in the world, and there are 180 currencies in the world, half of them will then have an inflation rate higher than Bitcoin, and many of those will be much higher than where Bitcoin is. So you have the halving, you have watershed moments that I'm expecting in the next 6 to 12 months. And it just looks like all of the stars are starting to align right now.
So I expect that we could stay under 10,000 maybe for another couple months as we get towards the middle of the year, as that monthly time frame tightens up. If it does eventually break bullish, absolutely going to be looking to test that all-time high in the Q2, Q3, probably Q3 of 2020. And then if we do break that all-time high, the odds of whether or not we're going to head back down under 10,000 start to decrease. So for every $1,000 we go above 20,000, the odds that we're going to drop back to 10,000 will decrease a little bit. So it all depends on the amount of volume, the amount of follow through that we do get. If we go up to 28, it'll be a lower probability that we drop back under 10,000. If we go up to 35,000, it'll be even lower. So I am definitely open to the possibility that we do not revisit under 10,000 again if this pattern that we're watching does break bullish and we do hit new all-time highs. And I certainly would not be placing trades anticipating that it would. That would be a lower probability scenario.
In a recent tweet, Ronnie, you said that it's very difficult to outperform a buy and hold and add-on dips strategy with just trading. What exactly do you mean by that?
Yeah, well, let's say you bought Bitcoin a few years ago when it was trading below $1,000. You're still holding it right now. When the market dropped to $3,000 a year ago, you add on dips. It went from 20,000 down to 3,000. If you were buying a little bit more as it was going down, then we had another correction in July, August, September, October. We went from $14,000 down to $4,000. Do the math. Anybody that's been in Bitcoin for a few years, held on to their original position, did a dollar cost averaging, doubling down when the market was oversold. My guess is that they've outperformed 90% of the people who were trying to trade this. Think about people that got out of Bitcoin on the 17th of December and didn't get back in. They missed a 60% move. That's what happens. If you're on the sidelines as a trader, the lion's share of the gains are going to happen in a small number of days on the calendar. It's the same thing with the stock market. 90% of the people on Wall Street can't beat the S&P 500 after transactions costs, direct and indirect. So I'm just a real skeptic. I'm sure there are some people that have put in the hours that Dan has that may be doing very well, but the average person on Twitter is probably not doing well at all and probably has ended up squandering a lot of what they had originally allocated to Bitcoin.
Well, of course, I guess that everybody agrees that hodling is a little bit is simpler than trading. So then, what do you think about these statements? Can you, in your experience, did you actually outperform this buy and hold and add-on dips strategy?
So yes, but I agree with everything he said in terms of the majority of people. So he said 90%, and I fortunately am in the 10% where I've been outperforming the S&P 500 and Bitcoin in the years that I've been trading it. And if you have the time to devote thousands of hours, and it's literally thousands of hours, then you can potentially try and get yourself into that 10%. If you don't, if you have a family, a full-time job, you can't focus on it and put in 100% effort. Every single day I'm waking up and before the sun and I'm putting in hours and hours into this skill that I'm learning and honing. So if you do not have that time, buying and holding, dollar cost averaging is definitely the way to go, and trying to be one of that 10% when you can't have complete focus in what you're trying to do, it's probably not going to work out.
So then maybe you can give us a tip about how to distinguish a bad trading advice from a good trading advice.
Well, you can tell, on social media, for a lot of it, it's just, does it pass the smell test in terms of someone being genuine or not? You can tell the people that are posting gains and saying, someone wanted to partner with us recently, and I went to their website, and the first thing it says on their website is, we can show you how to make 200% in a few weeks. Instantly, nope, not going to work with them, because that's a very unrealistic claim. You have to be realistic. So there's so many people out there making insane claims. just the other day on Twitter, someone said, this is the kind of year where you can turn $5,000 into $500,000 in the cryptocurrency space. And it's just these wild claims that, again, he said sexy, that's the word. It attracts people's attention. It gets them excited, and it's unrealistic. So realism is very, very key. And then you have to be able to watch the person perform. So people have been watching me put out daily YouTube videos for 3-5 years at this point, and they come to understand, okay, he knows what he's talking about to a certain degree. He's not always right. When he's wrong, he points out why he was wrong and what could have happened. You know, people that are deleting tweets when they're wrong are obviously names to be avoiding. So it's a space filled with scams. There's no doubt about that, which is why him being technical or skeptical of technical analysis, I understand it. And being skeptical of these gurus, these economic or trading gurus, there's so many out there. And if we know maybe 10% of traders are going to be successful, well, that means maybe more than half of the people that we're seeing on social media are not being truthful and are, like he said, just selling subscriptions and making more with their subscriptions than they are actually trading. So proof of gains is always a great way to be able to trust somebody. And I'm going to look into uploading after this conversation. I'll upload my cryptocurrency gains percentage-wise to give a little bit of validity. But overall, very careful out there. There's a ton of scammers.
In a recent tweet, Dan, you mentioned your long-term crypto holdings, which is 58% Bitcoin, 28% Ethereum, and 11% Litecoin. We understand why Bitcoin and Ethereum, since they are like the largest cryptocurrencies, but why Litecoin? Why not, for example, Bitcoin Cash or XRP, which have bigger market caps?
So unfortunately for the Litecoin bulls, it's just as simple as I've received some payments for courses or whatever in Litecoin, and I just decided I'm not going to sell. I'm just going to hold these long-term positions. So nothing more than just that. Obviously, Bitcoin and Ethereum, I have my fundamental reasons. Ethereum is the first crypto I ever bought back in May of 2017 after reading up about the potential and the fundamentals behind it. So it's nothing more than simply that's what has come my way, and I've decided to hold on to it. As far as diversifying more so in other projects, I just don't have the time to put in the amount of hours that are needed fundamentally to pick the winners. We've already seen so many coins. In my opinion, 90% plus of them are not going to have long-term value that's going to continuously make people gains. So I would be foolish to think that I can just guess on which of these fundamental winners are going to be if I'm not putting in the time and effort, because again, my time and effort is more so for the technicals, as that's been working for me. And as long as it continues working, that's what I'm going to do. So I've got my core, Bitcoin and Ethereum. And other than that, I know that I'm going to miss some long-term big winners, but I got to stick with my wheelhouse, what's working for me.
Ronnie, what do you comment on that?
Well, my recommendation is that you put 80% of your crypto money into Bitcoin, and then you spread out 20% of your money across the names in the top 40 that are on my list of open recommendations for my subscribers. I also want to emphasize that you have to be diversified. Crypto is only one asset class out of 8 that your money should be spread out over. You should be in cash, stocks, bonds, gold, silver, real estate, and art. And inside art is the collectibles as well. So if you're going to allocate 10 or 20% of your money to crypto, 80% of that allocation should be in Bitcoin, 20% in altcoins. And the last few weeks was a very good reason why you should have been diversified. It would have been very upsetting if you were in Bitcoin 100% during that 60% move we just saw when the altcoins went up by 100 to 200%. Dan is a little bit off. He said 90% of the names are scams or overvalued or risky or speculative. It's really 98 or 99%. So good luck trying to pick one flower out of all the weeds on CoinMarketCap. You're wasting your time, and you will also lose the shirt off your back. And people should be selling into the altcoin rally that we saw the last couple of weeks. We're seeing the same behavior that we saw 3 years ago, and people have a very short memory. They're going into the same names that the market told you were worthless a few months ago.
So that's the highlight right there. Just want to absolutely agree with everything that he just said, and very important to distinguish the diversification across asset classes, real estate, stocks, gold, all of that, because so many people are tunnel vision in the cryptocurrency space and taking on huge amounts of risk by having 80% of their entire capital in the crypto space. And then they're fluctuating, and their emotions are subject to those fluctuations with these prices. And it's a very, very high risk way to be living your life. So diversification across the board is absolutely important.
I have to add one point. I had 3,000 people sign up for my service at the top of the market at the end of 2017. 3,000 people. And I spoke with hundreds of those people on the phone before they signed up. And I would tell people to put money into the stock market. And they said, what is your forecast for the stock market? And I said, you will probably double your money over the next 7 to 10 years. And 95% of the people were not interested. They said, change the subject. I'm not interested in doubling my money over the next 7 to 10 years. I can do that with crypto in the next 6 months. Those people lost 85% of their money in the next year. 85%. So pigs get fat, hogs get slaughtered, and you have to be diversified. If you're not diversified, you have no one to blame but yourself if you get wiped out the way people did 2 years ago.
In a recent tweet, Ronnie, you said that the volatility we see now in the crypto market is nothing compared to what we will see when Bitcoin will reach the 30,000, 50,000 benchmarks, when we will see volatility increase so much that in one single day we could see 1,200 movements, 1,000, 2,000 movements. Why do you think that with increased price, also volatility will increase?
Right now, when Bitcoin is at $10,000, if it drops a few $100s, there are buyers coming in, okay? When we drop from $50,000 to $47,000 or $46,000, people are going to be rushing for the exits and panicking. The technical analysts are going to start giving you their sell signals, telling you that we're going to have an 80% correction before the 2024 bull market that comes before the next halving. And obviously, the more money people have on the table, the more difficult it is for them to sit on what they have. If you have 10 Bitcoin right now, you're only sitting on $100,000. If it's at $50,000, then you're already talking about $500,000. And you don't want to see that get wiped out the way people got wiped out off the last crash we had on 20,000 when we dropped 80%. And in the back of everyone's mind, we are going to get another nasty correction like that again. We're going to hit a high of 25 to 50,000 in this cycle, and then we're going to have a bear market and another nasty correction. And a lot of people are going to be trying to time the top on this market the way they did with Tesla a couple of weeks ago. We hit $1,000. I told people, get out of Tesla, put your money in Bitcoin. The next day, Tesla dropped $200. So you just have to be careful. The volatility will only get worse from where we are right now because we're at an undervalued price point. Once the market gets fairly valued or overvalued, obviously people are going to be a lot quicker when they pull the trigger.
Dan, do you agree? Do you think that volatility is bound to increase like this?
Yeah, I mean, that's the way that blue sky breakouts, which is what we call all-time highs, that's the way it goes. So when you hit new prices that haven't been seen before, there is a lot less previous price resistance, and there are a lot less, right now as we're working our way up from 3,000 to 14,000 to 6,000 to 10,000, we're hitting people's break-even point. People are, taking some off the table or selling. It's previous price history that keeps the range tighter and tighter. When we break that tightening range and hit price levels that we haven't seen before, it's the same thing like you said with Tesla. As soon as Tesla hit its all-time high, we started making huge, massive jumps because there's much less resistance. Traders like myself, the first reason that I got into cryptocurrency is I looked at the charts. I read about Ethereum. I said, okay, this is a cool concept. And I looked at the charts and said, oh, wait, we're in blue sky breakout. I know what that means. Gains are easy. We go up really fast. So that was a huge motivator, not only the fundamentals, but seeing the fact that we were in blue sky breakout to have me go in pretty aggressively into the space. So we will see absolutely huge volatility, thousands of dollars in one day. And all we need is that new all-time high to open up the floodgates for that volatility to come back.
Okay, so both of you guys predicted that volatility will increase with time, but isn't volatility going to prevent Bitcoin to become an effective mean of payment?
I think Bitcoin's moving away from that narrative. I think it is becoming more a store of value kind of, gold asset. So I don't think that it will be used for day-to-day transactions as maybe people believed a few years ago it might be. So I view it more as a safe haven asset, more like gold, and more like buy and hold long term.
I agree with that. I mean, I'm not buying a cup of coffee with my Bitcoin at Starbucks. That's ridiculous. Why would I spend $5 on a cup of coffee using Bitcoin if I think Bitcoin's going to go up 500% in the next couple of years? You don't spend Bitcoin if you think the currency is undervalued. And I think like Dan mentioned, this is a store of value. You just have to buy and hold it, and you will do really well over the next few years. You have to. What people have to understand is this is like Facebook, Amazon, Netflix, Google, Apple, Microsoft, Tesla. You're not going to become a millionaire overnight. You have to hold a name if you like it for 10 or 20 years, and that's when you get 50x, 100x on your money. You're not going to get that overnight, and people need to stop thinking they're going to become a millionaire 2 weeks from now. This is a buy and hold situation. Every time it sells off, add a little bit of money to your position when it goes on sale.
But then you said that you see Bitcoin more as a safe haven asset than a mean of exchange. That's clear. But you also said that we will see this huge volatility in the future. How can a highly volatile asset like the one you described to coincide with a safe haven asset, which by definition needs to be stable?
I don't think it needs to be stable. I mean, you look at gold. Gold has had huge volatility relative to its market cap over the last decade. It just all depends on the fundamental reasons people are getting in. If there's a major fear catalyst, everybody's going to rush in and you're going to see volatility. There's no way to fight that. So safe haven, in my opinion, doesn't mean stable. It means a place, I personally, as we're talking about diversification, I have a lot of my net worth in my stock account as a day trader, constantly moving it around. I sleep better at night knowing I have capital. Number one, I have long-term Bitcoin, but I have capital allocated, ready for me to click a button. If there's anything that happens, I don't trust our financial institutions. I don't trust our government. And I sleep better at night knowing that I have that escape vehicle just waiting for me to press a button if I need to use it. And I think that is why it is a safe haven asset.
Giovanni, Bitcoin went from $2,500 to $10,000 in 3 years. That's a safe haven, okay? That's a really safe haven. I don't care what happened in between all of the ups and downs and the volatility. That's okay. It's a safe haven, even though there's volatility, as long as the price keeps going up, okay? If the price dropped 80%, then that would be a problem. But it's okay for something to be a safe haven, and there can also be volatility at the same time. What is a safe haven? Something that preserves your capital. And so far, we have not seen anything come close to this. So the volatility is just something that comes with the territory, and you have to deal with it.
Ronnie, back in 2018, you made a bet with Vinny Lingham about the price of Bitcoin at the end of 2019. You said that Bitcoin was going to hit $28,000 by the end of last year, which didn't happen, so you lost the bet. In case you lose the bet, you said that you were going to donate $20,000 to freeross.com, which is a charity that is trying to free Ross Ulbricht, which is the founder of Silk Road, and that now is serving a life-term sentence in jail for hacking, for money laundering, and conspiracy to drug trafficking. You change your mind and you don't want to give that money anymore to that charity. You want to give that money to a few other charities of your choice. Why did you change your mind? Why don't you want to give that money anymore to freeross.com?
Okay, well, first of all, the $20,000 was already distributed. Some of you may know Trader Cobb from Australia. I gave some money to his charity to deal with the fires in Australia. I have another friend that I sent some money to that is For the Unseen. That's a children's school in Lebanon. And then $3,400 went to 5 other charities, $3,400 each. Went to the Harlem Children's Zone, Oxfam, Environmental Defense Fund, Doctors Without Borders, and there was a 5th one. The name is slipping my mind right now. But I posted receipts for that $20,000 on Twitter in the middle of January. That's when this was paid out. What happened with Free Ross is I was the headline speaker at the World CryptoCon in Las Vegas in October of 2018. That was 15 months ago. And I was on a panel with Maxine Ryan from Hong Kong. And we were talking about charities over dinner, and she mentioned this charity to me. The next day, I was on the panel with Vinnie Lingham and Charlie Lee from Litecoin. And I think Brock Pierce was on that panel as well. And he put me on the spot. He tried to, undermine me on the panel to show who the smartest person in the room was. And he says, let's bet on this. And I said, okay, $20,000 to Maxine's charity. And I really didn't know that much about the charity. I only knew what she told me the previous night. She said he was in jail for a nonviolent offense and got a life sentence. What happened is shortly after I made the bet, I found out that it was not what she said. This is someone who was convicted by a jury.
So it was a bit of an impulsive decision to.
Exactly. And after I made the bet, I found out, wow, this is not something I want to be supporting. A jury convicted him. They deliberated less than 4 hours. He was guilty on all 7 charges, and he lost an appeal. So this was very controversial. I'm putting myself in the situation of the people who had children that became addicted or overdosed on drugs that were purchased on that website. And I just couldn't, from a religious and moral and ethical standpoint, I just did not want my name tied to that. I reached out to Vinny after we made the bet. I wanted to change the name of the beneficiary, but he never responded to me. So the $20,000 did go out. It would have been a lot easier for me to just cut a check to Free Ross. But I reached out to his mom, who I feel bad for, but she never got back to me. I also don't know how much money they took in from donations versus what their expenses were. There were 250,000 people that signed his petition. They are more than welcome to give money to Free Ross. I decided that there were causes that are more closer to my heart than that one was, and without the controversy.
That's understandable. That's a clear position. So Dan, have you ever lost $20,000 in a bet like this?
Trading. I've lost $20,000 in a trade back when I was going heavier in the cryptocurrency space, but as far as an actual bet, no, not 20,000.
And what happened with that trading?
Well, the one trade that's sticking out in my mind was I thought I placed a stop loss back in maybe late 2017, early 2018. Trading, thought I placed a stop loss on my position, went out to dinner, came back, realized, that stop loss didn't go through, and ended up having a $50,000 loss on that one trade, which was the biggest loss at that point in time that I had ever taken. And fortunately, over the next coming days, the volatility was enough to get that back, but it certainly was a lesson that stuck with me.
So you already talked about it a little bit, but I want to talk about the Bitcoin halving. So what do you think then is going to be the impact of the halving on the Bitcoin price?
Well, the narrative is great in terms of that's what everybody's talking about. That's what everybody's looking to. It's nice for the general mainstream media as well as all retail traders to latch onto that and to have confidence in that event. And so that propels, this is the reason. So I'm going to hold Bitcoin because of this. And that goes a long way as far as seeing the recent resistance levels being able to break and then getting our follow through to the new all-time highs.
So you see it as a self-fulfilling prophecy, right?
To a certain degree. I mean, obviously the fact that, supply and demand is key for anything to do with economics, whether it's shares trading but the fact that we're seeing less supply coming in means that you can have the same demand a year ago as a year from now, and because there's less supply being created, it's going to have a more significant impact on price.
What about you, Ronnie? How do you expect the Bitcoin halving to affect the price?
Well, again, it is a self-fulfilling prophecy. If everyone on Twitter is saying that we're going to $20,000, $30,000, $40,000, there will not be that many people selling on the way up at $11,000, $12,000, and $13,000. Once we cross $15,000, the media is going to jump back on this the way they did 3 years ago. If we retest the all-time high of 20,000, my phone will be ringing off the hook. And I do think that the price is going to rise over the next 6 to 12 months. My price target is not as aggressive as some other people in the industry are at. And that's it.
So is there anything fundamental in the Bitcoin halving which will increase its value, or it's just like for self-fulfilling prophecy according to you?
Well, you're getting less Bitcoin hitting the market. At the same time, you're going to get a spike in demand, and that is not a bad combination when you want something to go up. That is the definition. It's like a short squeeze almost in the opposite direction. So I think the increase on Google searches for Bitcoin halving have been increasing at quite a rapid pace in the last few weeks, and I expect that to accelerate. And I think we're going to see a repeat of what we had in 2017.
Thank you, Ronnie and Dan. That was a very cool discussion. And for you guys, always remember to like, subscribe, and hodl.
Cointelegraph. Like, subscribe, and hodl.